So with the market cratering and hemorrhaging, and specifically Apple totally tanking, I thought it'd be very much appropriate to update you guys on what is going on with my Apple stake and what I have done in light of this current drop. And admittedly, I am in a sense chasing the stock, but it is never a bad time to buy Apple. So we're going to be looking at what's going on with the economy, why is the market tanking, and also an update, and quite a significant update, as I am putting a lot more money than originally expected into Apple. And that's why you can see the title of this video is no longer the last few videos that I did covering Apple, where they were called buying $75,000 worth of stock. Now this one is called buying $100,000 worth of stock. Take a look at that title. So we'll be diving into my Robinhood account, showing you the goodies, showing you my entire position now in Apple, how much the equity is worth, how many shares, and including the fractions as well. I always want to make it 100% accurate. But we have to address the elephant in the room that is the economy and really take a look at what's going on, because it has to do with good old Jerome Powell, the money printer, is back at it again, and the outlook for the economy is still bad. It's a little bit better, but it's still bad, and that is partially why the market is dropping in recent days and weeks. So what's going on? Well, even before the onset of the pandemic, the Federal Reserve, Jerome Powell, vowed to keep interest rates as low as possible, rock bottom rates. Thus, for those of you who don't know about economics, that encourages more borrowing and naturally increases the economy, and investors have a better optimistic view of the economy with more people spending and consuming and borrowing money. Now, we all know the famous adage, the infamous saying, an apple a day keeps the dislike button away, implying that you should go ahead and smash the like button. Be sure that you give it a big thumbs up, smash the like button. Just help with that YouTube algorithm. It does support me and my channel. So if you appreciate the content and the daily uploads, be sure you do click that like button. Thank you very much. The pandemic totally flipped everything upside down, but since then we have vastly recovered to the record, actually coming to record highs. The S&P 500 actually hit record highs during a pandemic, which is totally inconceivable. But now the market is starting to come down slightly once more. This is mostly due to emotions. We have a lot of emotional investors that are driving this market right now. There's a ton of uncertainty, a ton of fear, a ton of trepidation. So what is the 411? What is happening? Well, the Fed actually indicated on Wednesday, they actually came out with good news, and they stated that they would hold rates at or near zero through 2023 and boosted its economic projections. So the central bank now expects a medium unemployment rate of 7.6, so just about 7.5% this year. And that's down from the 9.3% that was expected back in June. So better outlook for sure, not as bad, only getting better. The GDP, the broadest measure of the economy, gross domestic product, is forecasted to contract though by 3.7, but that is better and much better than the 6.5 or 6.5% that it was expected originally. But the federal chair, the money printer himself, Powell, he did warn that we're not out of the woods by any means yet. He said, quote, overall activity does remain well below its level before the pandemic, and the path ahead remains highly uncertain. Investors just can't get enough. They can't settle, because it was just weeks ago that the market cheered the Fed's decision to try to target for average inflation, as well as keep these rates low for years to come. But there's also turmoil surrounding the vaccine. The vaccine is also going to be a great driver of the market. Even though it doesn't wipe it out immediately and doesn't get rid of the virus on day one, it's still more so a symbolic gesture, and it will definitely have a catalyst when it comes to how the market performs after that vaccine does come out and becomes available. This is because now you have Dr. Robert Redfield, the director of the U.S. Centers for Disease Control and Prevention. He had told Congress on Wednesday that a COVID-19 vaccine might not be widely distributed until next summer. Trump fired back, saying that Redfield was confused and made a mistake, and insisted that a vaccine will be available soon, possibly as early as next month. So the Dow dropped over 240 points on Friday's trading day, and it does still remain in the green though when you look at the last 6 months, and the last month has not been bad for the Dow. It is just barely slightly in the red. But particularly the market is wreaking havoc on the tech sector and industry, because Apple is just totally sinking. As of Friday, Apple has now dropped 22% from its peak and has given up $500 billion of its market cap, and has now lost its $2 trillion crown. It is no longer a $2 trillion company. it is now below that figure. And this is even after Apple just recently unveiled brand new products, including new iPads and a brand new Apple Watch that does not require the user to own an iPhone in order to own it. But I'm still supremely confident in Apple and Apple's growth, with 5G technology rolling out this fall and into 2021. And now you have analysts putting brand new price targets that have been surpassing their previous price targets. I am still extra confident in Apple, and that is why I purchased even more shares. So now we're going to dive into the highly anticipated portfolio. What does my Robinhood portfolio look like now? Again, this is just one of my portfolios, but the majority of my net worth is in it, and all of my Apple is in it, and most of my stock. So let's take a look. So I even further concentrated this portfolio. It is now even less diverse than it was before, because I have now sold a lot of shares of other companies. Let's take a look at what I've sold. I have now sold all of my stake in Visa. I got out at an average price of $207.44 per share, 52.131021 shares of Visa to be exact. I now own no more Visa. I'm also now out of Procter & Gamble PG. Sold a total of 50.267801 shares of PG, and I got out at an average price of $139.50 per share. I have now also sold Texas Instruments, semiconductor company. A lot of people might not like that very much. I sold 52.637087 shares of Texas Instruments at an average price of $141.77 per share. I have now sold Microsoft. I sold 54.238358 shares at an average fulfilled price of $204.97 per share. There was a large uptick earlier today with Microsoft, finally a little bit of momentum coming back, so I decided to sell it, and I took about over $2,000 profit on this ever since I bought it, about 30%, a little bit over, so it does equate to be better than beating the market, so I figured I'd get rid of it and put it right in Apple. So I now own officially over $100,000 of Apple stock. I now own $104,618.23 worth of Apple stock, to be exact, so about 931.5 shares of Apple stock. It equates to be 91.25% of my total portfolio, at least in Robinhood. So of course that does not include other E-Trade portfolios, but just speaking Robinhood, that is 91.25% of my entire Robinhood portfolio. Now my average cost was much lower before I started this whole buying spree these last few weeks. It was closer to $100. At one point it was even below that. But now, because I have started to buy so much more of Apple, I've bought more now than ever before. Now my average cost has actually gone up, but I still do remain in the profit. And a lot of the shares, I'd say a little bit less than half of them, were purchased way before this time period and way before the stock split. This is now coming on the heels of about a year and a half of buying Apple, at least in my Robinhood portfolio. I did used to buy in my E-Trade portfolio at an even lower price, so that would have been pretty cool if I could include that average cost. I would be curious to see what my average cost would be if you include that. But my average cost does now stand at $106.09, so still well in the profit. And now, because so much money is in Apple, and I have so many tens and tens of thousands of dollars in Apple, any tiny uptick or downtick, because you also have to pay attention to the red days, but of course we are going for the long term. Any small little tick, it could just be something as little as a percentage and a half up for the day of Apple stock. That now equates to be $1,000, $2,000, $3,000 in one day because of how much money is in Apple. So that's what happens when you play with the big bucks. Any little uptick or downtick could be a drastic movement dollar-wise. This is my total portfolio now, with a majority foregone conclusion being in an Apple. And of course I still have my Roth IRA as well as another E-Trade portfolio that's pretty much dead. Just some worthless bets on penny stocks that I made 2 years ago that I still hold to this day. And why do I call this video buying $100,000 worth of Apple stock? Well, that's because my plans are as follows. I do plan on selling store when it becomes positive. I'm going to take some profit from that. I'm not going to just break even on store. Technically, I already am in the profit because it has already paid off a lot of dividends. It has greatly paid off in spades. When it comes to those dividends are like over $100 each when they do get paid out every quarter. And my current value with stores 9,253.13. It was a lot higher before the pandemic when store was soaring. The reason why I'm doing this is because I did analyze all these stocks. This is not just something I did on a whim. It's something that I did think about and I did mull over. And essentially what I found was that the current stocks I do hold, including Texas Instruments, Visa, the average annual return is nowhere near what Apple is doing and can do. And at one point, it was even doubling for many years in a row, even more than that. That's 100%. Obviously, I'm not expecting for Apple to do that in the next few years, but the average is in my favor, and it does just make more sense to put the money in Apple. 1,000 shares would be pretty cool, because you could just easily say no matter what the price of Apple is, 1,000 times that number, and that is how much you have in Apple. There's even predictions that Apple could reach $1,000 one day, which would mean $1 million in Apple stock. Now, when it comes to Pfizer, Pfizer's not going to be as consequential. It's not going to buy me as much shares as Microsoft would or Store would, or the previous stocks that I've sold over these last few days and weeks and even months. And so, as far as Pfizer, I am going to wait until the vaccine does get released. Pfizer is almost certainly going to have to be some kind of a contribution to that vaccine. I currently own 33.557528, sounds like a phone number, shares of Pfizer, or 1,231.23 of Pfizer. If you do the math, it would only allow me to buy, I'd say, 11 shares of Apple. Robinhood, though, even though if you have the money in the portfolio, they only allow you to buy a certain amount depending on what your cash balance is. You might have to make it a limit order. That is not a guarantee fulfill. Now, don't worry, I'm not going that insane. I'm not going to sell my Roth IRA. That would require a 10% penalty, so I'm not doing that. I am keeping that money in there. That is never getting touched. I vow that and promise that. But I did not think or expect that I'd ever be selling these shares of any of my other stock, but mathematically it just works out and makes sense. What do you guys think? What would you do? Let's keep the conversation going down below in the comments. Would you put everything in Apple? Do you own Apple? How many shares do you have of Apple? Tell me down below in the comments. I'm curious to hear. And by the way, if you would like some free stocks, go ahead and use my link down below in the description with Robinhood. If you sign up down below with my link, you'll get a free stock. I get a free stock as a win-win scenario. And you can also refer other people for free stocks. When you use my link down below with Robinhood, it's free to open up an account. But hope you enjoyed this update on Apple. It is surely a lot of money that we are putting on Apple. I wouldn't call it a bet by any means. Of course, stocks could be a gamble, but it is very certain that Apple will continue to grow and only grow in the next couple decades and thereon as Apple does enter the healthcare market and unleashes new products and wearables. If you enjoyed this video, be sure to give it a big thumbs up, smash the like button. YouTube will just increase the algorithm, push it out to even more people, increase the video, rank it better, so it does support me and my channel. When you do that, I do appreciate it, and it's the least you can do for me putting 6 figures into Apple. So if you respect that, give the video a big thumbs up. And I now post videos every single solitary week, every single solitary day. You actually saw just recently I posted multiple videos in a single day. So if you also greatly respect that, go ahead and hit that subscribe button. If you want to see more videos on my channel, I post videos now every single day covering business, finance, investing, entrepreneurship, mindset, strategy, and tips and tricks from my own experience. And if you want to be notified every single time I do upload a new video, that way you're first line to see it before anyone else, click that notification bell as well. That way you're notified every single time I do a new upload. Looking forward to seeing you in the next one.